You have to sell it. The traditional buyers have been burnt in it and own too much. About 1/3 of all the debt is owned by foreigners. Through my life, whenever I was surprised, I realized it was because of the things never happened in my lifetime, but happened many times in history. So I think we're in that kind of an environment, the changing world order, the changes. We have to understand the changes. So for that reason, I studied these changes going back for a long time. There are 5 major forces. The first is the debt, money, market, economy force. Credit produces buying power. That buying power makes things go up, but it also produces debt, and there's a cycle, and we experience those cycles. That's number one. Number 2 is the internal political and social order, the left, the right, capitalism, socialism, and so on. And that was where the election is, and we're going to turn to that in a second. Number 3 is the great world order, the change in the world order. We had a system coming out of 1945 in which the United States was the dominant power. The dollar's the dominant currency. They create a set of rules. How's this system going to work? The United Nations, the IMF, the World Trade Organization, that's all changing in important ways that has a big effect. The great powers conflict, what's going on with China, Russia, it has a bearing on everything that we're doing. Number 4 is through history, acts of nature. Droughts, floods, and pandemics have killed more people than wars and toppled more orders. So they cannot be ignored, and I don't think at this time can be ignored because of the fact that there's global warming, there's other things going on. And number 5 is technology, man's inventiveness of new technologies that makes productivity rise over a period of time. And there's nothing that's going to be more important than these new technologies. So we're going through a period of those 5 factors, I think, creating almost a time warp. And the world, I think, is going to be very different in the next 3 to 5 years as a result of those. They're interrelated. So you can't talk about one without understanding that interrelationship to me. Would we have domestic order? How would that take place? Okay, risky situation. We have crossed that. We are past that. We have a mandate. Okay, the president has a mandate, the Senate, the House, and now the Supreme Court, and so on. So there's something new going on. What does that new thing look like? 2 things. Domestically, it's reform. I'll talk about that in a second. Internationally, it's preparing for the war or the possibility of war with China, most importantly, and with other countries. Okay, now let's go into that for a second. Okay, that reformation. Well, it's a reformation of government, and it's a reformation of the whole economy. Donald Trump in the administration is going to be like a corporate office. It's a capitalist reformation, and it has some of those fundamental values. That's going down to the nitty-gritty. Okay, what does that mean for technology? Like, we're going to have 20% of our key chips have got to be produced in the United States by 2030. Okay, in order to do that, how do you do that? That's connected to an energy plan. That's connected. Okay, so there are a number of initiatives here. There's an immigration, there's tariffs, there's, many things that are initiative. These people are tough, committed to the mission, and they're hard asses. Yeah. Like if you're making choices of this thing or that, there's no subtlety about that. So things like deregulation and the changes, that's what's going to happen domestically. And then internationally, self-sufficiency and a confrontation. So you're going to see fighters in that mission. Some things are going to go on the side. I take those very seriously. I think that that's right. And then internationally, we have to recognize what that picture looks like too. I'm going to just touch on that, but on touching on the domestic, I believe that this plan has been well in the works for quite a time. And I think that they're going to be able to hit the ground running. And so we're going to see those changes. We're going to have now a time where aspirations and that inspiration is going to hit the realities. Okay, you might have to change laws. You know what it's like to change laws? You can't do everything. So we're going to see the prioritization of that, but there's going to be the need. You must have these things accomplished in the first 2 years. So there's a priority question in terms of like, how good are they in actually pulling these things off? But those directions are real. Internationally, it's changed everything, okay? Because we've come from a world in 1945, the New World Order. The world ended in terms of that, And we had a system, multilateral organizations and all this. Now we don't have that system. We have an America first system, and you have a China first system, and so on. So there are no rules of the game. That is a power thing. So we're now it's tougher to have allies. You're going to have deals, but you're not going to have allies. And so different part of the world. We're paying attention now a lot to the United States. Of course, the United States is important, and we're Americans in here. But if you really want to understand the world, you have to understand how it's changing in a broader sense. What does it mean in India? What is the ASEAN countries going to be like? What is the Middle East like, the Gulf countries, and so on? That world is changing in a way that we shouldn't so singularly look at through an American lens. Geopolitically, you're in one of three categories. You're on the American ally side, you're on the Chinese and other side, or you're neutral. You don't want to get involved geopolitically. So we're going to have, for example, two totally different technology systems that are going to develop. An American version, a Chinese version, and so on. But in terms of globalization, I'm finding out like we're more globalized than in almost anything. Like everybody's together, same group of people doing deals. Okay. Right. They come from all different countries. Never before in my life was it like this. So you can find Saudis and Indonesians and Singaporeans and everybody, they're all in the same group. There's a group and they're all doing deals. And before it used to be much more, okay, here's Americans, and you wouldn't have Saudis or you wouldn't have doing the same kind of deals. They could be venture deals. They could be private equity deals. So this globalization of the economic part of it in terms of doing deals is very globalized. The understanding of people is more globalized. The education of a lot of people is more globalized. So both forces are at work, and they've never been together the way they were. When you went to that meeting and you're looking who's around, it's like, wow, they never were together like this, and they didn't speak the same language, in terms of investing or anything. Yep. Now they all speak the same language. They're all looking at the same deals. They're all saying, can we work together or can I outbid you? My mantra of investing is 15 good uncorrelated return streams, risk balanced. So I want to start there, right? Because I know that if I can pick good investments and they're uncorrelated investment, I won't lower my return because I'll have the average of those returns, but I will lower my risk by up to 80%. So my mantra is what I don't know, what the risks are always out there, and risk balance them. It's not necessarily dollar balance. So now if I step back from that and I think about, okay, the world now, so that's almost like 7.5% in things that are uncorrelated. There are some general themes, okay? My general theme would be, first of all, that we have a debt issue. And when I take that debt issue, most fundamental of all markets and the underpinning of every market is the Treasury market. It affects everything. You have to start with the Treasury market. And there's a supply-demand issue there in terms of this. And I've seen this before. One man's debts are another man's assets. When we talk about currency as a storehold of wealth, we're really talking, is debt a storehold of wealth? So when I look at that issue, I think we have a big issue that's there. It's a big risk. As I start to make tactical deviations from, well, let's say, what is a totally balanced, assuming I don't know exactly what's going to happen. My biggest, most important deviation is I don't want to hold much debt as an asset. And I think the Japanese example is such a good example. It steals money quietly. And the way it does that is people make the mistake of paying too much attention to their nominal returns rather than their real returns, how inflation eats away at that. And when I look at Japan, what they did on average over the last 15 years or so is they have a 3% lower interest rate than we had in the United States, and they depreciated the currency by about 4% a year. So you're losing 7% a year in the value. It's depreciated holders of those bonds because of the monetization and all of that. I think that there's a significant risk that that will happen to us. So when I think about that balance, I think, okay, now I don't want to concentrate any one bet on anything, but as I'm thinking about the bet, my biggest concern is that concern. Then when I get to individual stocks or anything, what are the risk premiums? What should I pay to be out of it? So I think that there's a risk there. If you had normal times and you say, well, what is the inflation rate? And then give me what the bond rate should be. I would sort of say inflation currently is in the 2.5%, 3% vicinity. You should have a 2% real rate. So you come out in the 5-ish vicinity without the supply-demand consideration. For those reasons, I'm concerned about rates. And I think people also pay a lot of attention to, is the Fed easing? And they think, rates will go down because of that.
Not exactly.
I've watched them go in two different directions for good reasons. You have to sell it. The traditional buyers have been burnt in it and own too much. In other words, about 1/3 of all the debt is owned by foreigners, and it's big parts of their portfolio. They've lost money in it. And besides losing money in it, issues like sanctions. Okay, think about the Chinese. Did the Chinese want the bonds?
Yeah, why would they buy our bonds if we're not buying their chips?
Japanese have had this problem, and so the portfolio is bigger. And then we've got not only the supply that is coming, a supply demand. So do they want to increase their market share? I don't think so in terms of the share of their portfolio. And then you put on that, that's just the new supply demand. The real issue, even beyond that new supply and demand, is if people think that that's not a good investment, you will get selling of existing debt. And if you sell existing debt and all of that debt, you can have a real disaster in the Treasury market. And so that would force the central bank in. What does the central bank do? They buy the debt, they print the money, and so on. And so that scenario exists as a realistic worry. So when I look at the markets, I say 15 good uncorrelated, but what would I want to have a tactical deviation from? I'm not really excited about the debt. Okay. Then when I look at equities, I think I have to look at the specific equities. The idea of talking about equity markets as a whole is an obsolete idea because they're so different. And, we're now in an era of disruption. So what disruption means is bad for one, good for another, and so on, and how that's going to change. Of course, the hyperscalers and so on done well. I believe that really the greatest advantages are going to be on those who use it well. And we're not paying enough attention to that. We're thinking, okay, did they make the chips? Did they make that? Okay, but the users, because they're in a war that's going to be a very expensive war. It's a war that's so important to them that there's not a question of whether there's a return on investment. You have to win or give that up. It's a national survival question. What it means is it's more important than profits. It's more important than money. Which country? The country that has the best technology not only will have the best economics, but they're going to have the best military. So these things are a war where profits can be a secondary consideration. But those that are benefiting from the technology and making transformations, like I think in investing, like I'm super excited because all of the times that my investing was, I would always write down my principles, my decision rules, convert them into algorithms, and I used expert systems to be able to build systems that would make decisions, computerized systems. I believe in that. Now, I'm very excited about what AI does in being able to do that. That's just only one area, but it exists in healthcare, exists in so many different areas. So finding those that are the beneficiaries versus those that are the detractors, the ones who are losing, but also getting away from really the super scalers and focusing on that, I think is important. I think location is very important. When I mean location, 3 basic things. When I look at countries, I look at companies the same way. Do you earn more than you spend? Do you have a good balance sheet? Do you have more assets than your liabilities? So are you financially good as a country? Good income statement, good balance sheet, because you're going to need that. Internal order. Is there an internal order that lends itself to productivity and so on, rather than fighting, including rich-poor fighting? Does capitalism exist in this environment, or is it going to be threatened? And number 3 is, are you in risk of an international war? It's so much better to be not in the war than to be in the war, because history has shown there are the winners, there are losers, and there are neutral countries. The winners lose. They get deeper into debt and they have their losses. The losers are devastated. The neutral countries are the ones who are the real winners. So if you can have those financials so that you have that, if you can have property rights protections and working well together, and you don't have that international war. So when I'm looking around the world for my 15 good uncorrelated return streams, these are the things that I think about. I have a small percentage of my portfolio in crypto because what we're really thinking about is we have to think about what is the alternative money. Because money, currency, is a medium of exchange. They will always be a medium of exchange, but it's a storehold of wealth. And so when you're talking about the bonds, the debt, okay, we have to think about an alternative money. And when we look at the United States and we look at other countries' currencies, they're all having problems, okay? So the same problems we're talking about in the United States are the same types of problems Europe has, same types of issues that China has. Am I going to own their debt safely and so on? And the same types of problems Japan has. So you tend to see them go up and down together. So you have to think about money. Money is, can I move it around? It's not like real estate that's knocked down and, nailed down, and then you also have it to taxes. So you're dealing with gold, and then you're dealing with the new version, which is crypto, okay? So you have to think about that. I prefer gold, okay? But that doesn't mean I'm into diversification. The reason I'm concerned about crypto is, first of all, privacy. The government knows exactly what you got, where it is, and it's also an effective way of taxing it. Because I was with central bankers when interest rates hit zero, a bunch of central bankers, and we're figuring out how negative can you make interest rates. The thing that limited the negative amount of interest rates was the paper. And so the answer to the question was, we can for a very short period of time have negative 400 basis points because of the fact that there's not enough storage space for all the paper. But they'll build storage space for the paper. Now, if you don't have the paper and you have it digitally, you can have as negative, it's just the same as taxes.
Right.
So when I'm looking at that, I think, okay, that is not exempt from crypto. And then the reliability of crypto in terms of, let's say, saying, does it correlate with inflation? Does it correlate with those things? No, it doesn't really, not well. It's still largely a speculative vehicle. And number 4 is also, it's not likely to be a reserve for a currency. Okay, it won't work. Whereas now, as countries need things, what is the reserve? Gold is the third largest reserve currency. The US dollar, the euro, gold, and then Japanese yen. You have to think about debt as being, maybe you don't want one man's debts or another man's assets. You may not want the bonds. You do have to think of an alternative currency that's going to also allow your buying power. And a currency is something that can go from one country to another. And so there aren't many. It's a fraction of Microsoft, one stock.
Right.
Okay. It gets a lot of attention. I think there's merit to it, but you heard what I said in terms of the association. Sure. A lot is going to have to do with capital flows and the tightness of money, and whether the Federal Reserve, when the time comes, is going to be shifted more to control, which it certainly will be under Trump and the administration, which would favor a much easier monetary policy. Yeah. So there's certain things that are going on, there's the tariffs, there's also the attraction for foreigners to come in terms of building businesses. There's got a lot of business building. And in some cases, we don't have the national champions, even though there's a desire for the national champions. The idea will be, if they produce it here, that they are going to be welcome. So you might see more capital flow in. It's a tougher question in terms of monetary policy. And so also it goes down, what is it that's going to go up? So when we look at the euro, when we look at the yen, okay, there are real issues. Like the yen, we're really dealing with 300 basis points difference in both real rates and nominal rates in terms of that tax that you have to pay in terms of the interest rate difference. So for those reasons, I don't think it's even the big question. I don't think it's the most important question. I think it's that all money will be at risk. It is certainly in the government's interest all the time to borrow and spend, particularly under your term, and then you let somebody else deal with the mess you created when they come to power, okay? So that's always the case. So it undermines the storehold of wealth. I think the Fed should target a real bond yield of 2% by and large, okay? 2% is not too high, real, and it's not too low. And should target that kind of a real bond yield, which you can see, by the way, in the inflation index bonds pricing. So I think that the cycles that we're going on from one extreme to another are very disruptive. But I think it's going to become a lot more political, particularly if there are problems, because the problems are going to be based on the Fed. And so it becomes political. And so I worry about that.
Or what do the governments do when they don't have enough demand? Central banks come in and make up that demand. They essentially print money, and then they buy that. And then that has a consequence.
The U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable.
So what you have is a situation where there's a supply and a demand for debt. As we have a new supply, that will equal in the United States now, by the way, this is a problem elsewhere too, but it's about 7.5% of GDP. So the supply of debt is going to be large. That's new debt. If I calculate also who are the buyers of that debt, there's not going to be enough demand for that debt. It doesn't look like there'll be enough demand. And the way that it works, there's two things to keep in mind. There's supply and demand, and then what do central banks do, or what do the governments do when they don't have enough demand? Central banks come in and make up that demand. They essentially print money, and then they buy that. And then that has a consequence. And so just like in 2020, 21, we went through, they needed to give money away, and the government needed to borrow, and the central bank produced the money and bought that. That devalues money, raises inflation, and so on.